Welcome back to the Make It Count podcast.
I'm Marcus Mire, founder of Mire Group CPAs and the Total Control Accounting System.
And I'm Tyler Warner, small business owner with a lot of accounting questions.
All right, Tyler. Today we're talking everybody's favorite legal entity, the LLC.
That's right.
Which, if you think about it, it's kind of like I was telling you earlier before we got on. It's like everybody throws around that term kind of like a write-off, you know? It's
Sure.
like the Seinfeld episode when they say, you just write it off. And they're like, do you even know what a write-off is? I kind of feel like LLCs are like that.
Right.
Like, on one hand, I love when people say, like, I'm getting organized, I'm forming an LLC. But sometimes I want to go, well, do you even know what an LLC is? You know? And this is not...
That's like step 1A of starting a business, right?
Well,
it's
I think
no one will move until the LLC
Like, I think you say I
formed.
have an idea, and then you say I have an LLC.
Yeah.
There's almost like, you know.
It's like me and domains. Like, have an idea, buy the domain.
Oh, get it.
And then the LLC.
I used to be in business with somebody, and I swear they had 50 LLCs. It was just like, well, I got to go reserve the name. So anyway, we just kind of... What I want to do today is have a brief conversation around what an LLC means, not from obviously a legal standpoint. We'll hit kind of a high level. I'm not an attorney. I always give that kind of disclaimer. Mm-hmm. But to kind of tell you what an LLC is from an accounting and tax standpoint, because I think people get this wrong a lot, or there's misinformation. And I will tell you, it's even confusing to me sometimes with the way, like, you get research written and articles written around LLCs. Even people that are savvy don't use the terms right. So today I want to give people a high-level overview of what an LLC can be for tax purposes and what it isn't. So that's kind of how I want to go about this.
So I think the first thing is, like, I didn't know until, it's been a while, but there's different types of LLCs. So that the C stands for corporation, right? Company.
Limited liability company. Yeah. Well, this is why we're doing this. You're the perfect example.
Yeah. So that company, there's... Well, then I'm already off. Because I was thinking there was like S Corp. I'm assuming all the alphabet. There's different A Corp, B Corp.
No,
C Corp.
Right. It's not A through Z Corp.
Okay.
Yeah, so that's why I wanted to have this conversation, because I think if you leave with anything today, you have to leave with this idea that an LLC is granted to you by your state. It's a state statute that basically says how a business is organized. So you form an LLC under the LLC laws of your state.
So does this mean there's like every state's a little bit different?
I would think so. Again, not an attorney here, but yes.
Okay.
I would think every state has different ways they handle their LLCs and how the LLCs are governed.
Okay.
But there is no LLC in the tax code. And so when you're talking S Corp and C Corp and sole proprietorship and partnership, those are all tax concepts, but an LLC can be any of those. So let's give you an example. An LLC, so you go and form Tyler Warner LLC, okay? Mm-hmm. You're the only, and another thing, LLC owners are called members. A lot of people don't know that. You think a partner or a shareholder. LLC owners are called members. Okay, but in the tax world, there is no LLC tax return. You might Google LLC tax return. It'll give you a partnership in the search results, but there is no LLC tax return in the tax code. That's what I want to get at. So Tyler Warner LLC, you form it. You're the only member. Okay. By default, you are taxed as a sole proprietorship. So let's kind of put that on the table. That doesn't mean you're a sole proprietorship.
And when you say tax, meaning like I personally own taxes at the end of the year based on my income.
It would be like this. You would be akin to you being an Uber driver. An Uber driver who gets paid and has some expenses is, in the tax world, considered a sole proprietor, right?
Okay.
A single owner business that's unincorporated.
Okay.
So kind of you can already see the contrast here. You saying, well, how am I unincorporated? I have an LLC.
Yeah.
Well, it's because the IRS says an LLC, a single member LLC, is considered a disregarded entity. So the IRS looks at you no differently than Tyler Warner doing business. In fact, that's what they think you are. They disregard Tyler Warner LLC.
Even if I don't call it Tyler Warner LLC, I call
whatever
it
you know
Tyler's Tasty Tacos.
Just, if you want to go alliteration, go right ahead. You get my point. Yeah. That's already confusing to people. It's like, well, hold on a second, because I get this question. People say, "I thought I was an LLC," and I say, "You are." The state has granted you the ability to do business as an LLC. Has nothing to do with your tax treatment. Mm-hmm. Your tax treatment is fluid to a certain extent, but there are defaults. So if you're a single member and you haven't elected, we're going to get into what these elections you can make, to be anything else, you are a sole proprietorship for tax purposes, which just means you don't file a separate tax return for that business. There's a schedule on your personal. You did this years ago. You file a separate schedule.
So is it safe to say financially, not necessarily legally in your terms of risk, but like financially, there's no difference in, say, I run a landscaping company on the side, or, I mean, well, I guess even like freelance, if I'm, if you're doing Tyler Warner LLC versus just, hey, give me a check.
No difference.
No difference.
From a tax perspective.
Right.
None.
So I guess, and I know you're not a lawyer, but I guess the only I mean, there are motivations to at that level get an LLC if you have to get, I mean, I think probably insurance for any reason.
Yeah, and I think too, everybody kind of understands this concept of separating your business and personal assets. Mm-hmm. So, for legal liability, if somebody would sue you, they would only sue they would sue the LLC, not you personally. So I think everybody kind of gets, I think most people understand legal protection, separate your assets, operate in an LLC or a business entity to protect yourself.
Sure.
But again, to your point, you're no different from the tax world, because I want to hammer this point away. The IRS says you're a disregarded entity.
Yeah.
Okay. So that's already confusing to a lot of people, because I literally have heard people say, I thought it was an LLC. I'm like, you are.
Yeah.
Yeah. Okay.
Thinking the implication is like that conversation comes up like, oh, I thought what? I thought I was going to get savings or taxes or.
So the next question that follows every time with I started an LLC is, I started an LLC, that means I can write off more, right?
Yeah.
And the answer is no. Because those deductions that would be available.
I started an LLC, where's all the loopholes?
Right. Well, they're the write-offs, right? Where's all the write-offs?
Right.
And so what happens is those deductions or write-offs that would be available to you as a without an LLC or a sole proprietor are available to you as an LLC that's considered a sole proprietorship because it's disregarded, right? It's no different. Like meals, travel, auto expenses, business licenses, supplies, name your thing, computers, all those things you're thinking of, home office, they're all available to you. So you get this kind of thought, and I get it. I think people think like once you become like a legal entity, like you've legitimized and you move up this level in the tax hierarchy, but you don't. But there's legal reasons why you would have it. So that's always kind of the question that comes hand in hand with the statement, I formed an LLC, is always on the heels of it is, okay, that means I can write off more stuff, right?
Right.
So.
But that's wrong.
That's wrong.
Okay.
You can write off all the same things.
All right. So take us to the alphabet. What are the other types of...
All right. Excuse me. So LLC, an LLC can elect to be treated as an S corporation or a C corporation. So again, are you a corporation? Have you formed incorporation papers with your state? No. You're an LLC by state law, but in the tax world, you can file a tax return as a corporation.
Okay.
There's forms literally you just fill out and say, I want to be taxed as an S corporation.
Now, are these corporation classifications like a federal classification that they just inherit?
Correct.
And is that why the states do it, I imagine?
Yes, your state tax treatment is always a piggyback, what they call piggyback treatment, meaning if you're an S corporation at the federal level, then the state's going to honor that.
Okay.
Make sense?
Okay, I think so.
Yeah.
So
the state taxing agency, not the state Secretary of State, which gave you the LLC. Again, I'm looking at your face, and this is why I'm glad we're doing this episode.
Yeah.
So just let's walk through it.
Okay, all right.
You form an LLC, and you say, look, my tax guy talked to me, and he said, based on the business I'm going to be in, thinking about ahead, it probably makes more sense to be an S corporation, which is what your business is right now, your LLC.
Yeah.
You pay yourself a salary. There's all kind of things that come with it. He says, you know what, Tyler, you should be an S corp. Mm-hmm. Let's file the paperwork to elect S corp treatment. All that means is now your LLC is not a sole proprietorship in the tax world. It files its own separate S corporation tax return. But it doesn't mean that the Louisiana Secretary of State now says you're a corporation. You're still an LLC. It's just a tax treatment.
Gotcha.
Following?
Enough. Yeah.
Enough for good questions. So you go along, you file corporate tax returns, corporation tax returns.
Yeah. I mean, I know enough to know now the difference because I was told the benefit. I mean, but I think most cases this is going to be, an accountant pointing out and saying, hey, okay, your revenue's gotten to a certain point where it makes more sense. And because there's specific, at least in my experience with S Corps, there's some specific tax savings when determining how you set up your own.
Particularly the payroll tax.
You're right.
Yeah, so real quick, we'll get into that just a bit. So if you're a sole proprietor, again, refresher, an LLC owned by one member is disregarded in the tax world, so it defaults to a sole proprietorship. Sole proprietorship, very simply, you pay taxes on the net income of the business, income tax, but you also pay self-employment tax. It's akin to a payroll tax. Mm-hmm. So when you form an S corporation, you get out of the payroll tax. That's essentially the game, and you have to pay yourself a salary, and you only pay payroll tax on that salary you claim. So there's some tax savings in there, and I'm not going to get all into the nuances of that, but I think everybody who's even looked at that, that's kind of that's the decision you're making. Yeah. When does it make sense to form an S corporation, pay myself a salary, have to then do payroll and payroll tax returns, and file a separate tax return? Because again, as a sole proprietorship, it's just one form on your personal tax return. It's not a separate tax return. So when does that make sense to go through that administrative cost and keep a set of books and all that?
Yeah.
S corp. All right.
Okay.
An LLC also can be a C corp. So real quick, S corp and C corp. C corp, always the way I describe it is think of your Disney or your Exxon, right? A C corp pays tax on the money it earns, the net income of the business, and then when they pay you a dividend, you pay tax on it too. And you'll hear this term in the C corp world, double taxation. That's what they're talking about. The company pays a corporate level tax on its net profits, and then if it distributes the profits to you, it doesn't get to deduct the dividend they pay you. Then you pay tax on the dividend you receive. Make sense?
Yeah.
So those are really kind of from a gone era. A lot of people were C corps years ago before S corps got really popular. It was kind of the thing where you went and got incorporated. You notice too, you don't see a lot of people with Inc. in their name much anymore. That's why. I mean, you would go and you wouldn't form an LLC 40 years ago. You'd form a corporation. You'd be Tyler's Tasty Tacos Inc.
Yeah.
Right.
Okay.
And you would be a C corp, and you'd file a tax return, and you would pay the tax on the money that the business made, the profits, and then if they paid you a distribution, you'd pay tax on the dividend. So it differs from the S corp, where the S corp, there's no second level tax on the distributions to you. Okay. Which you can already kind of think, well, it makes a lot of sense why there's some reasons to be a C corp still outside of the scope of probably this talk, but I think you get the point why most people are an S corp then. It's like, well, I can get out of that second layer of tax.
Yeah.
So with tax reform that came
really C corps are mostly like going to be either heavily vested companies or where they're giving out dividends, or publicly traded.
Yeah, or people that want to go public.
Okay.
So think about all your SaaS companies and all the software we buy that are all raising VC money and trying, those are all C corps, guarantee you, because they're less restrictive on the number of shareholders they can have. It's just that's the structure you're going to use if you want to raise money and go public.
So if you're kind of making the difference between, okay, I've got a handful of members here,
right?
And I guess that could be another thing is there's partnerships.
Yeah, we're gonna talk about that in a second.
Okay, so then you got, but if you're like, okay, there's gonna be a handful of us doing this, we could decide if we want to do a partnership or an S corp, depending on how we want to structure the profit payout.
Correct.
Maybe.
Yep, and you can do it retroactively too.
Unbelievable. How amazing and innovative.
I know.
And then, okay, but then a C corp would be like, if you're like, all right, we're going to have, we're raising money, this is going to have.
Right. Like maybe you're thinking like from the start, like maybe you're somebody that's already started a business and exited, like you kind of get this game, like, all right, I'm gonna form an entity, we're going to be a C corp, and we're going to go out and raise money. We're not limited on number of shareholders so that we can ultimately raise more money and go public or just or sell the thing.
So there's like I'm taking there's a limit on like members of
S
an
corps
LLC.
you can only have. So again, S corp you can only have 100 shareholders. Okay. So because you're a tax S corp, they would say your members are shareholders.
Okay.
But members and shareholders in that context kind of one and the same.
Okay.
All right.
All right.
Partnership. You brought it up. I'll get into it. Okay, so let's go back a little bit. Remember, LLC with one member, default treatment is, what is it?
Disregarded tax entity.
Boom. Sole proprietorship. Love it.
Yeah.
Okay. So now we're getting hammering away that concept of a default tax treatment. A partnership, so an LLC with multiple members is by default a tax partnership.
Okay.
Okay, so that's what changes when you and I form an LLC together. If we don't do anything else, we're filing a partnership tax return. Now, we could elect to be an S corp or a C corp. We couldn't be a sole proprietorship. Why? Because we have more than one member.
Yeah.
Yeah. I mean, you got this.
Yeah.
You look at me so confidently.
Yeah. All right. Don't press. Don't push it here.
You gotta stay after for the Q&A.
Yeah.
It's the best part of the show. So yeah, tax partnership. All right. So it's just like it sounds. I mean, lots of people right now have LLCs. You think about it this way: most people that have LLCs that have multiple members, if they don't elect S, obviously are a partnership. But you see some people they operate their business in an S corp to save payroll taxes, but maybe they own the real estate in an LLC. That's a partnership, and there's tax reasons for each of those decisions. That's a common structure you'll see. But yeah, just the default tax treatment of a LLC with multiple members is a tax partnership, and it kind of works like a sole proprietorship in that the owners are going to pay, generally speaking, if they operate the business and work in the business and are not just like a passive investor, they're going to pay self-employment tax on their net earnings from that business.
Okay.
So remember we said a sole proprietorship is going to pay self-employment tax or the payroll tax on everything, the net profit, whereas an S corp wouldn't. A partnership's going to be like that. It's just like a sole proprietorship in that way.
Okay.
So that's another reason why you might say, ooh, we maybe want to not be a partnership, want to be an S corp, or partnerships are more flexible. They allow you.
Yeah, and then there's some kind of like, I don't want to call it a glitch, but like a little issue, an issue with like which this is common, like where like partners of a business, one of them is actually going to get a salary of the business if he's like an owner operator.
Right.
And that in the past has like muddied the waters.
You're talking about in a partnership?
Yeah, like you can't take a salary as a partner.
That's right. Yeah, so you cannot take like and salary is somewhat of a loose term, but like a technical W-2 wage with taxes withheld and all, like, no.
Yeah.
As a partner in a partnership, which is what you are as an LLC member in a multi-member LLC.
Yeah.
Yes, that's
Meaning
true.
You can't get the best, like the S corp benefits, right, where you're no longer taxed, or you're just taxed on your salary.
Plus your share of the profits, but you don't pay the payroll tax on the share of the profits. It's the big difference.
But
that's
if you were in a partnership, you would. You would.
Yep, you got it. So yeah, but then we could get into a little bit. So then a partnership allows you to do certain things that an S corp won't. So S corp's going to be rigid. If you own 50% of the business and you take a fifth distribution of the profits, well, the other owners have to get their proportionate share. You can't say, this month I'm going to get a distribution, you won't, and vice versa. Like, you got to keep distributions in line with the ownership. Whereas a partnership, you can skew things. You can say, you know what, I put up the money, I want to get paid back first, or I want these deductions to get allocated to me. It's just very flexible in a partnership. Also, the way you take losses and stuff like that. So, I think maybe in another episode we could talk about that a little bit. But
yeah.
But I think the bottom line is for people just to understand that. Like, again, I don't think you've heard me say one time LLC tax return.
Yeah.
There's not. There's no form at the top that says LLC.
So for those who aren't as savvy as I am and may not have been just like, staying on board and quick as I've been, the bottom line seems like, okay, how bad could you screw this up? You mentioned earlier, like, things can be done retroactively.
Yep.
So like if you're thinking like what's the danger of
worst case scenario, you form an LLC, you own it on your own, just by yourself, and you don't elect to be an S corp, and maybe you should have, and you could have cost yourself some tax savings. But honestly, that's or you are a multi-member LLC, so by default you're a tax partnership, and you never file a tax return. I've seen that one before. People form an LLC, and I've heard them say stuff like, well, I'll just pick up my share of the income on my personal tax return. Okay, you can do that, but there's a partnership tax return, again, kind of that compliance arena. Mm-hmm. That doesn't make a lot of sense to you, but if you form an LLC and it's multi-member, the IRS is looking for a partnership tax return.
Yeah, and as I know, when the IRS looks for something, they decide how much you owe, and then they charge you interest on it, even if you've never been aware of it.
That's right.
So
that worst case scenario, to answer your question, could be 2, 3, 4 years of unfiled partnership tax returns, and those things are expensive. Like there's like $200 per month per partner late fee. Wow. It gets fast. Yeah. So that's kind of the worst case, but I think if you've taken the step of, like we started the conversation, all right, I got this idea, I formed my LLC, which almost they go hand in hand. Just talk to somebody, have a quick conversation, and they may not be able to give you, like they being a CPA may not be able to give you the exact path you should take, not knowing what you're going to make or does this business really look fruitful. But again, you have some flexibility because you could operate as a sole proprietorship for 2 or 3 years. Yeah. And then be like, okay, it makes sense to elect to be an S Corp now. That's available too.
And is this something that I know you're obviously a big advocate of talking to your CPA throughout the year, but I would imagine, your taxes are owed most of the time quarterly. Right. Is that about the runway? I know that's probably zoomed in a little too much, maybe for most planning like this of what your entity is going to be. But I'd imagine if your business is growing and you grow out of maybe that sole proprietorship and you want to explore S Corp or maybe even a C Corp, you can do that mid-year, right?
You can. Yeah, you can. S Corps, you can go retroactive. There's basically, I forget what it was. It seemed like 10 years ago, the IRS came out with a ruling that said you could retroactively, as long as you didn't do anything in your business dealings that would bar you from being in S Corp, like you guys were taking unequal distributions or you were doing things that weren't allowed in the S Corp world. As long as you didn't do that, you could retroactively say, look, I know we're in November. We're in September right now, but as of the first day of the year, I want it to be an S Corp. So just backdate my S Corp election to then, and we'll act like we were that from the first day of the year.
Gotcha.
Or you could do it. I've got another client that right now, we're doing an S Corp election mid-year, July 1, because there were some issues with their business in terms of the amount of equity they had. They had a deficit in equity. And long story short, it didn't make sense to do it in the first 6 months. It would have been a taxable event. They would have incurred some taxes. So we said, let's just do an S Corp election July 1. You have a sole proprietorship for 6 months. You have an S Corp from July 1 forward. So there's definitely flexibility with that, which is you don't hear that often in the tax code. I'm glad you brought that up. But yeah, you can definitely see how it goes.
Sounds like it makes a difference too.
Absolutely.
Make sure to bring that up.
Yeah, and the sole proprietorship has gotten a lot more desirable. Quite honestly, it used to be you'd be like anybody making any decent money, like let's just say netting, I don't know, 60, 75, 80 grand. You started to have that S Corp conversation. Now, because of the way the tax rules are written and what's called the QBI deduction, some stuff that came into play when Trump's tax cuts came into effect at the beginning of 2018, sole proprietorship has a lot of benefits, and the taxes on them are competitive. So you might stay a sole proprietorship. It's easier. You don't have to file a separate tax return. There's a lot of things that are attractive about it now. So again, just have the point of that is have that conversation.
Yeah. Good deal. Well, let's wrap it up there. And speaking of conversations, if you want to have that conversation with Marcus from the Mire Group, he can obviously get into the nitty gritty on which entity is right for you, and all those details. You can reach out at mire.group, MIRE.group, and schedule some time on his calendar there, as well as check all the other previous episodes.
That's it.
So, see you next time.
All right, guys.